There we go. So good morning, guys. I hope everyone is well, and I hope everyone can hear me well, and I also hope that you all can see my screen. If that is the case, please just type Y there so that we are together. Okay. So just type Y if you can hear me properly, and if you can see my screen, just type Y. Okay. Okay. I see you. I see you. All right, Tumelo, you can hear me. You can see my screen. All right. Okay. So now let me just okay, let me just get something. Let's see, GBP USD maybe. Okay, let me just get this one. Remove drawings. Okay, remove drawings. Then let's try to. Let's put this guy here. Let's put this guy here. Okay. Then let's try to play around here. Okay. So I'll be using this. Let me use GBP USD. That's fine. Okay, guys. So today, guys, what I want to talk about today, guys, is the power of the 1-2-3 formation, right? Is the power of the 1-2-3 formation or the market time frame identification. Okay, so guys, there is something that you guys don't understand, or something that I see a lot of mentors do out there. They just say, okay, we have a 1-2-3, now we're going to sell. We have a 1-2-3, we're going to buy, but they don't really tell you the basis of why do we have to get the 1-2-3, or why do we have to sell from the 1-2-3. Do you understand? So there is a history of the 1-2-3 multi-time frame identification. Okay, so back in the days, the banks realized that people's behavior work in 1-2-3. So most of the time, the banks will go and do these 1-2-3 formations for you to be caught on the wrong side of the market, and that you will be out of the market, and then they will be in, and then obviously you will be taken out for losses. Okay, so another thing, guys, that I see a lot of people doing wrong out there is the fact that on top of the 1-2-3 formation, let me talk about the 90% rule. Okay, I'm going to talk about the 90% rule because most people out there, when it comes to the 90% rule, they just go there. For example, let's say, for example, we have, let me just show you. Let's say we have a market going up like this. Okay, so we have a market going up like this. Okay, so when it comes to the 90% rule, guys, what I see happening, right? Okay, let me just do this. Yeah, what I see happening is that someone will come, someone will just come here and put a take profit here, right? And then this is the 90, right? And then when you put your take profit here at the 90, you just wait, right? So basically, guys, what happens, or what the rule of 90 actually means, okay, you must understand the meaning of the rule of 90. Okay, so if this price here was to come here, okay, not all the way, let me just highlight this like this, as this is the start of the structure, right? So with the rule of 90, you must understand that the start of the structure, that is the most important thing. Okay, that is the most important. So now this is the start of structure. So when we talk about the rule of 90, we are not saying that this move must come back all the way here. It's not a must that it must come back all the way here to the start. You understand? That is one thing that you must understand. It's not a must that it must come back all the way here, but it should go at least 90% to where it started. You understand? 90%. It should go at least 90% to where it started. You understand? So that is the meaning of the rule of 90. It should go at least 90% to where it started. So when you look at this market going all the way down here, this is 100%, right? This is 100% because this is exactly where it started. So the 90% could be somewhere around here. So that is why usually you'll find that when the market comes around somewhere here, then you will have those bigger flags playing out. Now you will have those bigger flags or those bigger retracement playing out. Okay, so that is basically what it means. So when it comes to the rule of 90, you must be careful with that. Okay, make sure that you don't just hold your position all the way to the downside, because it's not a must that the market must come here. So you should be able to manage your risk. Okay, you should be able to manage your risk. So now let's go now to the markets. Okay, let's go do this in the markets. Okay, so now guys, what we need to understand, remember what I've been preaching, right? Remember what I've been preaching is that there are only a few things that you need to understand. Okay, there are only a few things that you need to understand. Remember, I said that you must understand the formula, and the formula is what? Trend, phase, nature, pattern, which is where we'll get our multi-time frame identification, and then we'll get our entry using the rule of 3. Okay, and then secondary will go to candlesticks. Okay, so that is basics. Those are basics, guys. Those are basics. If you understand that when we find our trend, when we know that we are on an upward trend or a downward trend, we then identify what phase is the market is. Okay, what phase the market is in. After identifying the phase that the market is in, so now we look at the nature. What is nature telling us? Okay, what is nature telling us? So understanding the trend, the phase, are we in a corrective or impulsive phase, right? Then the nature of the market, right? Are we correcting or are we impulsing, right? And then from there we understand the patterns or the multi-time frame identification from there, and then simple, you'll get your entry. Okay, so now let's use the rule, these rules that I just gave you right now, the formula that I just gave you right now on this GBP USD. Okay, so now if I just take out a trend line like this, remember guys, a trend line, we don't use it to identify really the trend. We are not married to the trend line. A trend line is just for us to outline structure. Okay, it is just to outline the structure. So we are not being married to the trend line to say that no, if the market breaks this we're going to buy because of the trend line. No, the trend line for us is to outline what? Structure. Okay, so guys, when you look at this, when you look at this market coming down here, you can say that this market was on a downtrend, and then obviously here the downtrend was broken, and then the market started going to what? To the upside. Okay, so let me just put this somewhere around here. Okay, let me just put this here. So now when you look at this market here going to the upside, what do you see, guys? What do you see? You see natural progression of the market, right? We have impulse, correction, impulse, correction, impulse, correction, and then impulse. So you can see the natural flow or the natural progression of the market when the market is going up. This is an upward trend. Okay, so now when you look at this market going to the upside, obviously you can see that, okay, when this trend line, now I want to show you something about the trend line, why we should not be married to the trend line. When this trend line now started, right, when this market started, this trend line was something like this. Okay, this trend line was something like this. All right, it was something like this, impulse, correction, and then this was the trend line. It didn't touch here. Then now what we did was simply evolve this trend line, because we can see that what the market is still doing, what? Pushing to the upside. So this trend line was then something like this, impulse, correction, impulse, and then the market broke. If you look at somewhere here, when it broke this trend line here on the lower time frame, someone would have came here and sold this market and say, no, the market broke the trend line, we're going to the downside. Okay, what actually happened is that now we're still naturally progressing, impulse, correction, impulse, correction. So now what you just need to do now, you just get to evolve what? Your trend line, guys. You just have to evolve your trend line based on where the market is doing. Okay, based on what the market is doing. So as you can see, we're progressing, impulse, correction, impulse, correction, impulse. That is progress. That is what the market is doing. So now this trend line, now we can evolve our trend line. We know that this trend line now is something like this. Okay, so we have this upward trend, and then now we have this upward market going to the upside, right? So remember, that is the first thing that we identify. It is the trend. Okay, it is the trend. So now after identifying that, okay, we are on the upward trend, we are on the upward trend, right? We are on the upward trend. Now we need to understand the phase of the market. What phase are we in? Okay, that is the question number 2 you ask yourself. What phase are we in? I understand the trend from the higher time frame. Now, what phase am I in? That is the question that you must ask yourself, okay, before anything else. What phase are you in? Then after identifying, so now you can see, okay, we have the impulse, correction, impulse, correction, impulse, correction. So what phase are we in right now? Impulsive phase, okay? We're in the impulsive phase. But then now there is something very interesting here. Let's look at how this market is going up, down, up, down. Then we have this impulse here at the top, okay? Here at the top here, the market came, we have impulse, correction. Then now, looking at this portion here, if you look at this portion of the market now, what do you see? Do you see any progression? Because remember, guys, the natural progression of the market is what? The natural progression of the market is impulse. It's impulse, correction, continuation, okay? Impulse, correction, continuation. So those are the things that you must always have in your head. You must understand that the natural progression of the market is what? Impulse, correction, continuation. That is how the market moves. That is basically how the market moves. So if you look at how this market has been moving, we have impulse, correction, continuation, okay? So that is the continuation, of course, which is the impulse, okay? Then we have correction, continuation, right? So correction, continuation, right? Correction, but then here on this impulse, right? On this impulse here, we did not continue. We failed to break these tops. We failed to break these tops, and then now what happens there? We get a double top formation, right? So now this is where then now, let me just highlight the lows of this. So now this is where then now, guys, when we look at this structure now, if we look at how this market is moving, and then if I just combine the top trend line together with the bottom trend line, I should have a nice structure there, a nice 1, 2, 3 pattern right there, okay? So when you look at this 1, 2, 3 now, which has been formed here, okay, which has been formed here, we have 1, 2, 3. Remember, guys, another thing now, what I was saying of the importance of the 1, 2, 3 formation, okay, you must understand that it is not a 1, 2, 3 unless if now, okay, for the first one we must have, let me put this one here like this. So this is the first top, okay? So this is the first top. So we must have, for us to know of this second top here, let me just squeeze it a bit. Okay, let me put it cleanly here. Let me be clean with it. Okay, let me be clean with it. There we go. So there we go. We have a nice 1, 2, 3. Okay, so now for us to know if we have the 1, 2, 3, the second one, right? The second high must break what? Must break the first high, but it must not come back to the area of the first low. So what I'm basically saying is that this high, this was the first high, right? Then we have what? We have this impulse, right? So this impulse must not come back where? To this double top, and it must not, to this double bottom, I mean, and it must not again go and touch the area that we are looking for. All right, so now what we have here, now we have a perfect 1, 2, 3 formation. This is what has been happening: impulse, correction, continuation, right? Which is impulse, correction, impulse, right? So now after checking that, guys, now here at the top, that is where we are interested in right now, because now the market seems to have stalled. So now when we go to our smaller time frame, remember, we understand what the phase that we are in. So now we understand the phase that we are in. So now we're going to look for what? For the nature. What is nature telling us? Do we have progression? No, the market is not progressing. So now when we go to our daily time frame, let's quickly go to our smaller time frame, which will be our daily in this manner. So when we go to our daily time frame, guys, what we can see is that now this was our correction, and then here, right here, this was supposed to be what? Our next impulse. But instead, what happened? The market just moved up there, what? In a corrective manner, right? The market just moved up there in a corrective manner. The market went there in a corrective manner. So we can clearly see now, this is what we have. So now we have this market coming here to this double top, right? Then now the nature is telling us it's corrected. Then the pattern, right? The pattern, which is number 3. Then now we have that 1, 2, 3 multi-time frame identification. So if you are going to get an entry, obviously on the MTI, we are going to wait for this third touch. And then on the third touch, what do you wait for? You wait for this 1 hour retracement. It will be a 1 hour retracement, obviously, on the smaller time frame. So here, this is the daily time frame. So we're going to use this as the retracement candle. So now we can see we came here and then we have this 50% retracement candle. And then at the close of this candle, guys, that is where then now you could have entered your position. All right, at the close of this candle, that is where you could have entered your position, your stop loss just on top of your third touch. And then your first take profit area, of course, obviously, you'll be looking at the lows. All right, you'll be looking at the lows of this structure, which is actually the last area or 90% rule. So now when you look at this, now you still have more and more opportunities to take. So guys, when you have an impulse like this, and then now you should not panic and say, no, the market is gone, I cannot enter. Because now when we have this is where then now I can be able to pull out my tool. I have this tool that I use here. So understanding with this tool, guys, is the fact that now, okay, in the green zone, this is where, like I said, you can be aggressive and all that. You can take as many trades as you want, right? And then in the amber zone, it's basic. In the amber zone, you should really be careful, because in the amber zone, we're expecting those larger flags, right? So in the green zone, we expect those small continuation flags, and then in the amber zone, we expect those larger flags. Okay, so those are some of the things that we should understand. And obviously in the red zone, that is where we'll be expecting reversals, right? So obviously in the red zones, we will be looking for entries. So now what will happen, guys, is that you patiently just wait for the market to do what it wants to do. Now if you missed your entries from these flags, we have smaller flags here. I doubt it will allow me to go to the 4-hour time frame, but then yeah, we have smaller flags here, guys. So now what's going to happen here, let me just quickly try to play and see if the flags played out on the daily. Let's see if the flags on this amber zone, we're expecting a flag, of course. So on the smaller time frame, this will be a flag. This is the first flag actually. See, then now this is the next impulse, okay, all the way to the 90. So on the smaller time frame, guys, when we go to the 4-hour, right, or the 1 hour, this will be what? This will be a flag, just like we were expecting it to happen. So if you had missed all this, you still had this to take, okay? You still had this to take. So there is no need to panic or have FOMO. So now what has happened, guys? Now we have reached the 90% of what? Of the inside structure. So a lot of people now, you'll find someone is still holding a trade from here. Like, it does not make sense. Because what you need to understand that now, you have chowed so much. If you look at what you have chowed here, let me just go there. Obviously our stop loss will be over 40-30 pips. So this is about 16%, right? 16%. And then if also on top of that you add this position on top, okay, this position also, it comes with its own what? Some are 7%. So one position you have banked over 22%, right? On one position you've banked over 22%. And remember, guys, we still have what? You still have this move, okay? You still have what? You still have this move to take, okay? So now when you look again, when I go to my higher time frame, remember I just used my, that's why I was saying that with this tool that I use, guys, it's not just a matter of using it, right? You have to understand, right? You have to understand what or how it's implemented. So now on the bigger time frame, when I look at it like this, okay, on the bigger time frame now, this is my area. So what I'll be waiting for, I want to see if price breaks out of my trend line impulsively, okay, and then I get that correction, right, for it to go to the downside. So this is the green zone. So in the green zone, we are still safe. Okay, so now after this market breaks out of here, this is where then now here I'll be expecting those kind of big and complicated flags before it goes to the downside, right? So now let's just put this to a play real quick. Let's see what's happened. Okay, we still impulse down, impulse. Yeah, let's do this. We're in the amber. Okay, look at this. In the amber, we're expecting those big 1, 2, 3 formations. Okay, so let me pause right there. Let me play it through. Not yet completed. This is all happening in the amber zone, guys. So now remember, this would have been your move all the way here. Okay, So let me just pause it there. Okay, so now what I want you to look at here is what I was saying, né? So here in the green zone, what do we expect? Small flags, small tight flags. And then in the amber zone, right, in the amber zone, that's where we expect this big 1 2 3 what complicated formations. We expect this big 1 2 3 formations to happen here. All right, so when you look at this structure, when we look at the structure here in the amber and the red zone, this is what happened, right? We have this impulse, and then now we have this complicated. So obviously you cannot hold through from here all the way to here. That's what I was saying, that you cannot hold through all the way from here to here. But once you understand what happens now when the market is here, or what type of formations do you expect when the market is in the amber zone, or now it is then that now you can be able to take advantage of such moves. Okay, it is then that you can be able, even though the structure is messy, you can be able to take advantage of such moves. Okay, so this is where then a lot of traders get lost, because they don't understand where exactly are we in structure. Okay, so understanding that now the market broke out of your 1 2 3 formation impulsively. Remember this word, impulsively. It broke out impulsively. It did not just break out. Okay, because what you need to understand is that for you to say that the trend has changed, there must be something significant that has happened. So we were in an upward trend, and then now here we broke out of the upward trend impulsively. So that gives us a shift of momentum, right? It gives us a shift to say we are going to go to the other side. Okay, so we were shifted here, and then now we have those small tight flags. If I go to the smaller time frame, we have those small tight flags that are happening there. We have a flag there, and then now we have this 1 2 3. What time frame is this? Daily. Okay, this one is like this. This one is like this. It's like a double top kind of formation here, the way I see it. Okay, it's like a double top kind of formation. You see we have this impulse, correction, impulse, then there is no progress. We have the 1 2 3 here at the top, like that. Let's not complicate things. So we understand this is happening where? This is exactly what I said. In the amber zone, we expect what? Those bigger flags. So this is happening in the amber zone. And then in the red zone, guys, in the red zone, you can see what is happening. In the red zone, this is where then now we're expecting reversals. Ne? So I would not really advise you to go and take trades in the red zone. Okay, I will not really advise you to go take trades in the red zone. So your green and your yellow, those are your zones. Okay, and then because another thing that you have to understand, guys, is that when you look at this market now, when you look at this market from any time frame, if you enter a trade from the green zone, right, if you enter a trade from the green zone, you have all of this to chow. Okay, you have all of this to chow, right, if you enter a trade on the green zone. And then if you enter a trade in the amber zone, you have this to chow. Okay, you have this to chow in the amber zone, right? And then obviously in the green zone, look at the green zone. On the red zone, look at the red zone, look at it. You don't have as much profit to chow than the green and the amber zone, and your risk again here on the red zone is high. Okay, it's high. So this is where we'll be expecting either the market can break out to give us some sort of continuation, or the market now can reverse from here, right? The market can reverse from here. So this is the red zone. So that is what we expect on the red zone. So let's just give it a play and see what happened on this one. See, guys, now this looks like 1 2 3. Okay, let me just pause. Pause and remove this. Okay, so guys, what you basically have to do is to wait for the market to come to you, the market to do its thing, and then you can take your trade. Okay, it is as simple as that. So what you can see here now, this is what has happened, right? This is what has happened. Okay, So this was the structure now. So we see this impulse, and then now we have this big expanding channel going where? To the double bottom formation, okay? To the double bottom formation. So if we check this now, we have a market which gave us what? This scooping formation, which gives us a double bottom, right? And then from a double bottom, obviously we expect what? The market to push to the upside, right? So now when you look at this scooping formation again, how did the market get there? How did the market get there? That is the question that we ask ourselves, because these things are not random, guys. These things are not random. So if you look at this, this is one thing that I always show people. I say, guys, look at this. Okay, look at this now. We have 1, 2, 3, right? We have this here, and then we had a sell-off, right? We have a big sell-off. And look at the timing of this. I want you to look at the timing of this. This is 2019, right? Do you remember, guys, what happened in 2019? In 2019, do you remember what happened in 2019? Hey, Tumel, in 2019, what was major in 2019? We're living or staying, what you call levels, level 1, level 2, yeah, level 5. Yeah, it was COVID, right? It
Yes,
was
yes, yes.
it was COVID. So when you look at this, the market was allowing this sell off. But what did they blame it on? COVID. But the market Xing everything. Look at the 1, 2. The market was actually allowing this sell off to happen. And then now again, the market retraced. And then now again, here we are, 2019, COVID. Again, 2020, they bring variant 2 or something. But the market was saying sell. And then people were panicking to say that no, COVID made the market to crash. No, COVID did not make the market to crash. The market structure has always been like that. The structure was just waiting, right? Remember, guys, news only create volatility. It does not create anything. Okay, it creates volatility, not direction. So already the direction was there. I remember I was giving a mentorship to these other guys last year or pre-COVID somewhere there. I said, guys, looking at the market needs to crash, and for it to crash, there must be something major to happen, right? So that is when down now they introduced what? COVID. They bring COVID. So guys, everything that you see here in the market, right? It just plays out the way it's supposed to play out. There is nothing like, as long as you understand the structures, then everything is fine. So now look at this. As I was saying, you have this what? Scoop, double bottom, we pushed. And then now where are we? We are here at the double top, right? Then we had a trend going up here. We broke it, right? We broke it here. Then we have a correction. Then after this correction, natural progression of the market, guys, it's as simple as it gets. But what you need to understand is that you have to do a lot of back testing. You understand? You have to do a lot of back testing for you to see it like this. You have to do a lot of back testing. Remove drawings. You have to do a lot of back testing. So now you understand that, okay, this market here, this was our top. Then now what happened here on this double bottom? Here, there was a nice entry here, guys. There was a nice entry here on this double bottom, okay? There was a nice entry there on this double bottom for a buy. Uh, just that, guys, there is one thing, maybe I have a confession. Like, honestly, myself, what you call, I tend to see sells more, or I like selling more than buying. I don't know why, because for me, I just feel like the sells are more powerful than the buys. Like, the market crashes, it takes a very short period of time than when it's buying. Do you understand? So that's why for me, I feel like sell, for me, it's important. It's important to be a seller than a buyer, because if you look at the buy, okay, let's say for example here we're selling, right? So we have impulse correction, impulse correction, impulse, right? So when you look at the space of time that this took, right? July 4 July, 22 June 2016 until 22 September, 6 October 2016, right? So July, August, September, October, 4 months. And then the buy here from 2016 all the way to 2018, 2 years. So you see, like, why I literally like selling more than buying, because like for me, I feel like the cells are more powerful. Yeah, I feel like the cells are more powerful. But then there is a trick that you can do. There is a trick that you can do. Where's that thing? Is it function I? So you see, so you can function I if you really like, if you are a seller, you understand. So if you do this, right? If you do this now, let me just alt I. Okay. So this is, let me just reverse this. I want to show you a trick that you can use if you really like selling, but then you can't see buys. Okay. Let me just pull this back. Let me pull this back. Yeah. Okay. So if we're looking at this to take the cell, okay guys, I'm gonna leave you in like 5 minutes time. So obviously there's legal time, there's legal time, so I'm gonna get a power cut in a few minutes. So okay, so guys, what you can see here now, we have 1 2 3. This is a sell position, right? So if you want to understand how to also find the buy positions, right, you can just invert this position like this. You understand? So now you understand where, okay, if I'm buying, I have this 1 2 3. So now when this market comes here, I'll be expecting the market to give me a flag and continue to the upside, right? So if I could just give this a play like this, there we go. So this is how you can be able to get those buys, right? But then after all, this one in the real life market, this is a sell, right? This is a sell. So for you to also practice on, for you to practice on how to get buys, that's basically what you can do. Just press Alt plus I, and then it will invert the chart that you are in. Okay, so if you find out, okay, if I was going to buy this market, how was it going to be? So you can see exactly we have the same thing. Buy, this is a buy, but then here on the original chart, this is the sell. Okay, so if you wanted to buy this market, this is how the market would have played out. All right, so it was going to be like this: 1 2 3 impulse. You have that flag there, everything is sorted. You have that flag, your entry. Oops, again. Okay, there we go. So your flag, your entry, your take profit obviously here at the 90%, and then you'll be getting out for about, you'll put it right about there to get about roughly, it's what? Yeah. Roughly 0. I don't see it. Why can't I see this one properly? The risk to reward here is very low. I would not take this trade from here to here, but then you understand what I'm saying, right? But then when you look at the bigger structure, obviously, when you look at the bigger structure, how the market is playing here, you'll be looking to take your profits at the 90% of the structure. Okay, you'll be looking to take your profits at the 90% of the structure. So guys, if you have any questions based on today's lesson, please give me a shout right now, because I'm gonna leave you in a few minutes. Okay, give me a shout right now if you have any questions, so that we can attend to them. Okay. All right. Okay, Freeman. Thank you. Thank you, guys. Cheers.